boys and girls. Um, it's your boy AB Styles back again with another video. And I'm sorry this video is dropping late. Currently, today is Monday, and I'm currently in a trade, an EU trade, which is currently moving in profit, and also a GU trade, similar trade idea, which is also in profit. Yeah. Last week was a losing week for me. I was down. I ended the week down -1 hour. I was getting 1% of the account, but I put down -1% on the account. So I took a couple of trades, and there were a lot of losers. I think I took. I can check. Quickly go through. Okay, I took 10 trades. I had 8 losses and 2 wins. And I ended up the week -1 hour. So that's where risk management comes in. That's where risk management. See, I wrote it out here. 10 trades. You can see it. So that's where risk management comes in. That's where making sure you only risk a little percent of your account, which is 1% for me. Taking 10 trades. Losing each trade was -8 hour. Only 2 wins I had, each cumulatively risk to reward, So it gave me enough profits to end the week in just -1 hour. So this week is already starting nicely. Those 2 trades I just showed you are the trades I just took, and this is Monday. This video I'm going to drop it today or maybe tomorrow, Tuesday, depending on how fast I can edit it. So basically, that's how it is. Newbie traders may think that you can trade forex without losing weeks or losing months. No, you don't. No, you don't. There are some times that you're going to have losing months. You can go into a losing streak for even 2 months. Very possible. So what's going to keep you alive is capital preservation. You preserve your account, and you make sure that you don't let your emotions get the best of you. Because when you say you're losing TV trades, you want to risk more, so that when the next trade you prefer to be a winner. So if it wins, you can be in profit. No, that's not how it's done. If that next trade is a loser, which it can be, you're going to be in bigger losses or bigger drawdown. So basically, this week is just starting, and it's going to be a killer week. I'm going to drop a video. Sorry that this video is coming late. But it came better late than never, right? I'm going to show you USD CHF trade that was, I didn't take this trade, but I just saw it. I know I traded EU, GU, and I just started trading USD CHF. So, I missed this my losing streaks. USD CHF got a beautiful setup that I missed, and EU on Friday would have given me a nice 2-hour trade, but I closed the trade prematurely because of psychology, it. So let me just go into the chat and show you the USD CHF trade idea that I missed. It was a very beautiful trade. So that's just the content of this video. Please leave a like, leave a comment, and subscribe. Okay, onto our chart, right? We see this price leg right here that sunk impulsively to take out these liquidity resting below these equal lows. You can see I mark out equal lows here, right here. So immediately price tapped and took out this liquidity. You can see that this bearish run lasted for hours, right? Now this is the 1 hour chart. So each of these candles is for an hour. This is more than, let me say, 2 days or 3 days of downward movement. So immediately price took out this liquidity. Price is what? Price is oversold. At this point, price is oversold, and usually after this kind of runs, you can mark out your range from this high. This is swing high to this swing low. Sorry about the noise. So this is the range, and usually after prices gets overbought or oversold, an overbought condition is when there has been a bullish run, but this is an oversold condition because this is just a bearish run, right? Price tends to return back to equilibrium. What is equilibrium? Equilibrium is 50% of the range. So from this swing high right here to this swing low here, the equilibrium is this midpoint, 50% of it. This is a CB. CB is set side the balance, back side the inefficiency. So you can see that there's been no trading. Let me take off this color and this other block. So this is the CB. This is the major target, because this equal lows is called external range liquidity. Then this CB is called internal range liquidity. So when you see this kind of thing, you will know that there was only buying in this place. You can see that there's no wick. You can see that there's no wick in this candle. It's just a smooth candle down. There was only selling rather Only sellers were in this region. So price tends to return back to this region to fill it up, right? Okay. So with that in mind, after price took out these uh, equal lows right here on the 15 minutes, we see, let's drop down to the 15 minute. We see price giving us, showing us a willingness to go up. This is Wednesday, right? So this Wednesday, you can see that after price took out these equal lows, this is that equal lows that I marked out before in the hourly chart. You can see that price went down and broke structure impulsively to the upside. You can see these bullish candles. These bullish candles, this is an impulsive break of structure. This is telling you, this is the market makers telling you, or this is the market, this price action telling you that the market wants to go up. When you see these consecutive bullish candles heading up from this region here to this top here, breaking this structure, you can see it was a downtrend. We are breaking lows, kept breaking lows, kept breaking lows. Then when we got here, after taking out this liquidity, we immediately broke this high impulsively, leaving behind what? An order block. So there is a 15-minute order block right here. These consecutive candles are order blocks. So in this kind of situation, I usually go for the mid candle. But of course, you can cover this full range of to mark out all the candles. OB. Then, if you are too, let me say, if you're looking for a tighter stop, you can just target this last candle, this last order block. But most times price will not tag you in. You can see price barely tagged us in. Depending on your broker, your spread might not tag you into this trade. But in this case, I guess it did. So you target this at the mid order block, place your entry, long position. This trade got tagged in on a Thursday, right? Wednesday shows the willingness to go higher, but Thursday, London session, which is 2 o'clock to 7 a.m. New York time, price immediately opened, tapped into this order block and started what? Consolidating. After consolidating for a while, you can see the consolidation right here. After consolidating for a while, maybe because of as a result of no news release or anything, price broke out of the consolidation. Broke out of the consolidation right here, retested it and rallied away. Targeting where now, that CB I talked about. So if you are taking this trade, right? This trade was a 9.5p stop loss trade, and the take profit was 62 pips. The total reward was a 6.59 hour reward. If you want to make it a 7-hour reward, would you have it? Yes. So if you are decided to target 7, like you risk 1% of your account to get 7%, you would have gotten it. So this is a beautiful trade, right? And I missed it because I was focusing on other pairs, but it was very clear and it was very nice. So just take note of this, like what you've learned today. Equal lows get taken out after a bearish run that stays long. The market is oversold and price tends to return back to equilibrium, just to balance out the whole movement. And then you look for orders, you look for a market structure shift, an order block, and make sure it's clean, make sure it's clear. Make sure it's clear. Like before this price returned here, you can see it's pretty clear right here that price wants to go. Look at it. It's pretty clear. Equal lows get taken. Price broke structure impulsively. So it was a beautiful trade basically. Then in 30 minutes you can even see it cleaner. Just look at it. Is this not beautiful? Isn't this beautiful? Isn't this clear enough? So yeah, so that was a trade. So hopefully you learned a little from that little trade breakdown on USD CHF, which I didn't take by the way, but it's just something for the journal, something for you to go back into your chart and look, study and observe and see how consistent it is, see how many times it's right, which is a lot of times actually. But so you can go back in your chart and then study it and for this pattern over and over again, repetition, back test, and it can be something you can adopt, right? The market when it's selling for a long time, it becomes oversold. If it's buying for a long time, it becomes overbought, and there's a tendency for it to retrace or return back to equilibrium. So that'll be all for this video. Thank you very much for staying until the end. So please leave a like, subscribe, and share. Leave a comment as well. Styles out.